All right. Good morning, traders. As you can see, I am not live, but that's okay. Have no fear, as I am here. And I will tell you what I am looking at for Tuesday, October the 10th, 2023. Let's get on with it, shall we? Bitcoin trading sideways as usual once again. I typically do not like to see Bitcoin trade sideways after making a bullish move, as one could look at it potentially as being kind of bullish, like you're seeing some accumulation. The setup is still looking bullish as far as you are above the 50 on the RSI, you're above the 21 exponential moving average. You got monthly support sitting at 27,223. The one thing that I don't like about this setup, though, is this monthly support has been tested not once, not twice, not 3 times, but yep, 4 times. So yeah, usually when a support is tested on multiple occasions, price does have a tendency to maybe break down. However, if you do want to take the setup at support, then you would be looking for buying around this area, making sure that your stop loss is setting below the lows and only risking 1% of your account's total equity. Moving on to the weekly time frame, there is that big bad boy, the 21 exponential. If Bitcoin is going to remain bullish, then I would definitely want to see this hold as support and then maybe potentially put in this week's low at monthly support and then go, baby, go. But we'll see what happens. As you can see, small little trend line from that high to that high. You got to break out roughly the same area as monthly support, roughly the same area as the 21 exponential. So I do expect it would be tough for the bears to push it below there, but you never know. But the setup absolutely would be looking to get long here until you close a weekly back under the 21, as that's typically when I stop looking for bullish entries. I am still currently holding my short from last week's high. All right, moving on to the S&P 500. For anybody that likes to trade futures out there, I have taken the liberty to go ahead and give you the expected move for today. As yesterday, the SPX traded all the way up to, you're right, its expected move for that day, and then pulled off a little bit, and then the market closed. Today's expected move high, 43.59. Today's expected move low, 43.11. Remember, if you are going to be trying to take trades around this area, that you use risk management, because many times, like on this day, for instance, price can blast right through these areas. It does not have to stop there, okay? It's just another type of setup, form of potential resistance. It's what the options market is pricing in with the implied volatility. Now, how do you translate the expected move for the S&P 500 over to the contracts? If you're trading the E-minis or the micro ES, that would be very, very simple. What you would do is you would wait for the 930 candle. When you get the 930 candle, which we're about to get, unfortunately, then you would take the open of that candle and add $24 to it. So whatever the opening price is, say the opening price is $43.75, open up a calculator, add it $24 to it, put your line there. I currently have 2 lines drawn here, but I took this from the open of today's range, but I am going to move them once we get the 930 open. As futures trade 24/7, I tend to find that using the open, the actual open at 930, then adding the lines from that price tend to work a little bit better. But that's what I would do. Yesterday had a pretty bad day. You can see currently have 2 positions open, one on Meta, one on XLK. Both of them bearish put spreads. All right, so you can see that both of those positions are currently down. We'll see how those play out today. But moving on, go ahead, get your daily open real quick. Let me pull this back up. Go back over here. Let's see, what is the opening price of this candle right there? That would be simple. Let's get it. It is 4376. All right, 4376. Pull up a calculator. 4376 plus $24 equals 4,400 exactly. All right, so we'll take this line here, double click it so we can move it, and we want to put it right on 400. All right, back with the calculator. Where is calculator? Thank you very much, calculator. 43.76. So we'll clear this bad boy out. 43.76 minus 24 equals 43.52. Beautiful. 43.52. So let's check where this one is currently at. 43.52. There we go. So there is your expected range on the day. Typically what I do is, if we get down here and this acts as support, I would look for a buying opportunity. And the same goes for the speech today at 1 o'clock. The president will be speaking at 1 o'clock, basically to address the nation. I'm sure he is going to talk about the travesty that is going on over in the Middle East. That could cause some volatility today. So please make sure that you use tight stops and use risk management. But if we are to test this, I would look for shorts. Test this, I would look for longs, right? Currently, I would probably stick to the long side of the market unless the risk factors are bad. But we can go ahead and look at Market Watch. Go over here and visualize real quick. The market's got a pretty bullish day with 75 stocks on the open advancing and 24 stocks declining. So I'd probably be more prone to buy down in this region instead of looking for sells up here. All right. With that, you guys have a fantastic rest of your day. Sorry I couldn't go live. A little bit of PC issues, internet issues, everything issues this morning. So, but we got, thankfully, a whole day of trade ahead of us. So there's no point to get in a rush. All right. Thank you guys so much for being here. If you want me to do more of these daily videos like this, but maybe get them out before the market opens, share that to me by smashing that like button and hitting the comments and let me know. Thank you so much for being here. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.